started on the YouTube Live. Okay, preparing to live stream. Just give me a half a second while this thing is queuing up. I posted a quick question here. This got nothing to do with anything we're talking about. This is just a crazy question here. Okay, there we go. Looking good. Just what do you guys prefer? Using a bank teller, a person, a real person, or an ATM? This is just a quick question, and I'll tell you why. This okay, this stems from a conversation I had with a friend of mine yesterday, and and we had different opinions on whether our people would prefer a bank teller or an ATM. Please just punch that up in the questions box, which one you prefer, and then just kind of a cool little question here. Okay, good split. Okay, mostly ATMs. Okay, teller. That's a good split. Okay, just curious. All right. It's not a right or wrong question, nothing like that at all. It is just a basic question I'm asking. All right, let's get started, folks. I'm going to start the recording right now. Let's move along here. Okay, where's the recording? Here we go. And good evening, everybody. Welcome to DayTradeSPY.com's weekly fireside chat. This is our introduction to trading week-end review session. Okay, it's something we do every week. I just want to see all these different people online here. Okay, let me just go scroll down. A lot of people still joining us here. Just want to welcome everybody, and especially if you are new on. Okay, it'd be really good to have you on here. My name is Hugh, and we have my good friend Aaron. He may join us a little bit later on. I think he's in Kansas City right now. He said he may be joining us a little later on, so not a problem. All right, not a problem at all. All right, a couple of things I just want to tell you. First of all, just a couple of little housekeeping items. I tend to speak a little bit too fast sometimes. All right, sometimes I get a little it just get speaking too fast. It's because I get so excited about what we talk about. I get very passionate about it. Been doing this for many years, and I'm more excited now than ever before. And if you find that I'm speaking a little bit too fast, please use it in the questions box. Just tell me to slow down. Or if we're going to talk about anything technical, tell me to, maybe use some other words or something explained a little bit differently so you understand. It's not that you're listening slow. Sometimes I just do speak a little bit too fast. But rest assured, if we get into anything technical at all here tonight, you're not going to miss anything. All right. I'm going to try and stay away from that. All right. So today is Sunday, April the 28th. Introduction to options trading, week-end review. There's a questions box. You'll find a little icon on your Zoom dashboard. Click on that. I am the only one that sees that. And get to have you on here. Okay, yeah, we're gonna take some questions here a little later on. Okay, people are still telling us here. Teller, ATM teller. Okay, cool. Okay, all right. Please speak quickly. Okay, thanks for that, Bob. All right, so what else I wanted to tell you? This is going to be recorded. This is being recorded, and it will be made available on the website DayTradeSPY.com. All right. If you are new here, please let us know. All right. Put in the questions box if you are new here. And if you don't know anything about options at all, let me know that too. And I'll quickly go over an options primer for you. All right. And I don't want to leave anybody behind. I don't want to talk about something you don't understand. And I'm sure those of you who are familiar with options don't mind a little a little patience in this as I go over some details on the basics of options and what they are, why we trade day trade spy options. All right. So please tell me in the questions box if you are new to options, and and if you are, a lot of new people here. Monty, excuse me, Alexia, thing here. You won the 2K challenge ending. You've done a great job. I learned a lot. Thanks for that, Donna. Second time for Mike K. Okay, Joe P. New first time watching a DayTradeSPY webinar. Okay, a lot of questions here. Ivan Z. Good. David O. James K. A lot of new people. Okay. All right, Doug. Okay, Shannon. Good to have you here. All right, lots of new people. We're going to do a little bit of a primer. All right, not a problem. We can do that. So, got to get to this disclaimer here. This keeps us out of jail, keeps our lawyers busy. So, I'll give you half a second here to read this, and I'll be back in about 10 seconds here. Okay. And a drink of water here. Okay. All you have to remember is you are responsible for all your own trading. Past performance does not guarantee future results. Charts are courtesy of Schwab, Thinkorswim, and Tasty Trade. All right, so there I am, live and in color. And well, there's one thing I want to do here. I forgot to actually do this, and that is to set up my own cell phone, my thingy here. Give me a minute here. Okay, I don't want to waste any time with this, but so that I look into the camera, register, bear with me, zoom this out and cut the sound. There's a lot. There's a lot that goes in here. I'm a little disorganized here tonight. Not sure I realize. There we go. All right, folks. So there I am, live, living color, and trying to get in focus here. So my name is Hugh. All right, been doing this a long time. There's Aaron over on the side. Um, what this is all about is something that started quite by accident. And I've learned most of my trading from the trenches, School of Hard Knocks. That's where you learn that's where you get the best, that's where you get the best results. Okay. Celebrate the wins, but you learn your lessons from the losses. And goodness knows I've had many losses. I've been doing this for many years. Came from corporate America as an internal auditor. Handed off a lot of my money to my financial advisor to invest in my retirement. By the time I realized that he'd blown up about half my account, that's when I said, "Okay, I got to learn how to do this myself. Just give me all whatever's left, and let's go with that." So I learned a few things, and I started with equities, looked at futures and forex and options on different stocks and companies and different things, and eventually find myself into the Spiders S&P 500 SPY SPY. This is the stock that follows the top 500 stocks, the S&P 500. And as it turns out that I didn't have to do a whole lot of analysis. Before I used to be in all these other different groups, and we would have to spend, oh my gosh, every Sunday night. Of course, we'd be online Monday through Friday, 9 till 4. And we'd do, I think, Tuesday and Thursday nights as well. We're always consumed by the stock market and our trading. And we had different stocks to look at, different companies, sectors, all these things. I don't even think we knew what we're looking for. All I know is that when they asked for my report, I said, I have nothing to report. I don't know. I didn't even know what to look for, but I mean, how would I know where the stock is? How would I know where a trucking company is going to be on Wednesday when it's Sunday night, or where where some of these defense stocks are going to be on a Friday when it's Sunday night? I had no idea. You look at earnings. Of course, earnings didn't really pan out because sometimes you'll see good earnings, like we saw with Meta today, this week. Facebook, Meta, right? Their earnings beat the estimates. So naturally, you would think that that would be a good thing and the market's going to go up. But no, they're talking about, well, it's going to be a little tough Q2 and not sure we're going to hit our targets and stuff. These kinds of comments from the C class, right? C-suite. And of course, Meta, you all know what happened there. It tanked. They lost $200 billion overnight, literally. Wow. Well, that had a profound effect on SPY and the NASDAQ and everything else, right? Anyway, I soon discovered that SPY is the way to go. This way, I only have to, get in front of my computer between 8 and 8:30 every morning, check to see where the economy is going. It's sort of on a macro level. I didn't have to go to specific companies or sectors. And eventually, I discovered a few cool things that worked very well for me. And by trading that and a lot of other things involved, fundamentals, technicals, that sort of thing, chart patterns, trend lines, different things like that, I was able to make some pretty serious money. And that's when people started to take notice because I suddenly had, lots of vacations. Of course, I wasn't doing my corporate job anymore. New house, new cars, new airplane. And people started saying, okay, Hugh, you obviously won a lottery or something. You want to play my numbers? No, no, no. I'm just trading SPY. What can you show me? And so the business aspect of this whole thing started back 14 years ago, 2010, almost 14 years ago. Actually, it was on May, I believe it was May the 6th, that either May the 6th or the 9th. I'll have to check that. That will be our official 14 years of doing this publicly. And we've been training people internationally around the world since that time. And about, I think it was in 2022, we were bought out by Eagle Financial Products, subsidiary of Salem Media and we brought on Aaron. Aaron is now he's not here tonight, is he? No, he's still away. He's going to be joining us later, perhaps. He texted me, so he'll probably be joining in. I think he forgot about that he's on Central Time and we're still on Eastern. Anyway, Aaron opened up his first trading account when he was 17 years old. He was in high school. He was down in the library when all his friends are out there, playing sports and chasing girls. He's in the library. What a nerd, right? I mean, he's a self-described nut when it comes to this stuff, but he was obsessed with Wall Street Journal and all these these papers and magazines and things, and he'd always be charting stocks and stuff, and he was getting right into the stuff. He actually mastered deep dive technical analysis. I'm talking about he goes right into this thing with the Andrews pitchfork and Fibonacci and all these other crazy things. Something beyond me. So, and he's actually a former technical analyst for a $150 million commodity fund. We scooped him away. So Eagle Financial got Aaron and myself, brought them together and threw them in the mixer, and we have what we have now. And we've got a lot of people are making a lot of money. It's just been going gangbusters, and we're all excited. We're very happy, and I shouldn't say everybody's making money. Some people are still learning, but if you're learning and you want to get really good at not how to trade SPY options and how to make some serious money and something to change your life, this is where you got to be. This is where you are. Congratulations. All right, so what was I going to say about all this here? Aaron's a good guy, all right? And here's what I just want to tell you. So Aaron has his set of indicators that he uses, technical analysis. I also have my set of indicators that I use. Now, each of us is independently successful with the way we trade. Now, when we put our indicators together, we have a saying that when our indicators unite, our trades ignite. All right. And that's very, very powerful stuff. Now, admittedly, the last couple of weeks have been a little challenging. We haven't always agreed on things. And sometimes he'll say, I think the market's going to go to the downside. And I say it's going to go to the upside. Well, we battle it out before the market opens. We actually get on the phone and we get on Zoom and everything. We battle it out, trying to get some consensus. And I'm starting to wonder whether it's just who's got the dominant personality or convincing remarks, but we have to come up with certain key things. And I'll admit it has not been easy the last couple of weeks, but it's getting better. We have convened as to how we're going to move forward and what we're going to be looking at and how we're going to make things even better for you. Anyway, that's kind of the introduction to who we are and why you should listen to us. So a little bit of an announcement here. Spy in the Market. This is actually a newsletter that goes out every Thursday morning. I write the newsletter, and it's approved by a whole bunch of people, including Aaron. You'll want to get this, folks. It's a free e-newsletter every Thursday. All you have to do, it's a very brief 3-minute read, light, relevant, entertaining. All you have to do to subscribe, just go to the website, DayTradeSPY.com. In fact, I'm going to pull it up right now. Where is it? DayTradeSPY.com. And this is it right here. Now, I think you're probably going to see, okay, so what you want to do is, here it is right here. So what you want to do is just subscribe to the daily payout plan. I think you'll actually see on your version another ad or something. You won't see the two of these. You'll see one of these and something else underneath. Put your name on the list. You're going to get the free e-newsletter, and it's actually pretty cool. And last week, our topic was sell in May and go away, not for day trade spires. Okay, we don't have to do that. That's actually pretty cool. In fact, our newsletters also go on the website for if you miss them. Here it is right here. Learn to become a confident. So if you want to just click on this, sell in May and go away, you can actually read the newsletters right here. It's actually pretty light reading. It's about a 3-minute read, and you'll get some pretty entertaining kind of comments there as well. All right. But, if you put your name on the list, you're going to get this thing first thing in your inbox on Thursday morning. This week's topic, why I don't like to use stop losses. Excuse me, why I don't like to use stop losses. And I'll tell you, there's some pretty good reasons why I don't like to, but there are some reasons that, well, we're probably going to be introducing some of this, especially for the new traders. All right, let's get on with the program. What we're going to talk about here today is a review of last week, preview of next week, the 2 to 10K challenge update. I'm going to give you a 2-minute tutorial, have some Q&A, and how we can help you. But now with all of the people who are new here, we got a lot of people online here tonight, a lot of people. Excuse me here, clearing my throat. Barbara C, Richard D. Oh my gosh, Jacob, Lewis, Thomas. Okay, let's get on to our primer. All right, this is our primer. We're going to hit this. Why did I do that? No, that's not what I want to do. I want to go back here. I hit the wrong button. All right, here we go. Okay. If you are new to options, all right, this lady here, she'll tell you what we do. Well, we only day trade SPY options, period. That's all we do. We get in and get out, preferably within like a few minutes every day. Sometimes we're in there for just some seconds, maybe 10, 20, 30, 30, 40 seconds. Other times, let's put it this way, our long-term strategy is to the end of the day. I mean, who does that, right? End of the day. That's it. Our plans are not to hold overnight. Not to say that we never do. Once in a while we have to, but our plan is to get in and out quickly and then do it again, do it again, do it again. What do we trade? SPY. That is the stock ticker symbol. That's the symbol, SPY. SPY is the highest traded stock out there. It's an exchange traded fund. It's like a mutual fund. It is the stock that tracks the top 500 stocks. So the basket of the top 500 stocks is the SPX. Sometimes people ask, well, why aren't you trading the SPX? It's because it's more expensive. Excuse me. The options are also more expensive, and there's more liquidity, I think, with SPY than SPY is more at that retail level than SPX. If you're into the top 500, and maybe if you're an institutional and you're actually trading millions and millions of dollars at a time, then you'll probably go with the SPX ETF rather than SPY. I don't even think EX, it's not an ETF. It's SPY is the ETF, exchange traded fund. SPY is also very affordable. You can actually start with even say $1,000. Somebody asked me the other day if I've got $500, can I start with that? And I said, well, technically you can, but you're going to make coffee money at best. After commissions, you're not going to make a lot. So what I would do there, I said to him, was I would invest the $500, keep adding to your pot, get involved with our program, learn, do paper trading, right? Can't lose any money with paper trades. Get in and just learn the stuff. And then when you have several $1,000s in your trading account, then transition to real money. Hopefully by then you have learned enough, our system and everything else, and you'd have been pretty good with it. Okay. I think that's kind of important. It's SPY is diverse. People sometimes say, how about diversifying? You're on one stock. So, well, I can't think of a more diverse stock than SPY. All the sectors are represented under this SPY umbrella. Okay, so everything is there. And there's nothing more diverse. It's also very liquid, which means that if you buy something and sell something, you don't have to wait for the market. There's a ready market right there. Years ago, I traded over $100,000 in single trades, and I got filled within might have taken me a little longer, maybe 30 seconds to get filled for 100,000, but really not more than that. I mean, I don't trade that much anymore. I don't have to, but it's very, very liquid. Just about anything you throw at it, all right, SPY can handle. There are millions and millions of shares and millions of contracts that are traded on SPY every day. So the huge profit potential is really attractive to me because you don't have to wait a long time. You can get your profit very, very quickly. And it's also very exciting trading. I mean, it's a real adrenaline rush. It's just an adrenaline rush that I wake up to excited every morning to do this. So what are options anyway? Well, options are actually contracts. Our days as day trade spires of buying the stock are over. We don't really care. Remember they used to give those stock certificates? Hey, listen, if anybody really wants one, I think I got a few of those hanging around. Let me know. I'll probably ship some useless stock certificate to you. But actually, options are contracts. You're actually contracting with somebody, all right? And then it gives you, the options holder, the right but not the obligation to trade the underlying asset, the underlying stock for a certain price by a certain date. Now, don't get too bogged down in the terminology. All you have to just remember two names here. These are like the names of your kids. You're going to know these actually better than your own kids. If you expect the stock to go up, you buy a call option. If you expect the stock to drop, you buy a put option. Call up, put down. And this is pretty cool because SPY can actually make money going both ways. See, we like to make we like to make money if the stock's going up. But if you think the stock is going to go down today, you buy a put option. You don't sell it, you buy it. And with the way we trade, by the way, we don't trade any spreads, no naked positions. We simply buy and sell calls and puts in that order. Now, options have a strike price. This is that set price at which the underlying stock, can be bought or sold for if and when the option is exercised. Now, we have no intentions of ever exercising an option. As a matter of fact, I've yet to meet anybody who ever even wants to exercise an option. Why would you want to? We're here to make money, right? We don't really care about owning the stock, the underlying stock. So with the way we trade, we want to get out of it. But every option has a strike price. This is that standard by which you measure the stock or the option rather, whether it's going to be profitable or not, right? Options have expiration dates. This is the end date at which the contract is going to expire. They don't last forever. So options are not buy and hold strategies. Okay. It's not like a stock. If you buy a stock, you own a piece of that company or exchange traded fund or whatever it is, right? So let's say a company, you own part of Apple or Microsoft or Google or whatever it is, you own it. So depending on their profits, their dividends, all these things, you're going to receive a piece of that action. But with options, that's not the case at all. All right. And if you wait long enough, it's going to go to zero, the value. It has a time component to it called theta loss, and it's going to expire. It's like buying an ice cube. The ice cube is going to melt on you slowly at first, and then the smaller it gets, the faster it melts. That's kind of what an option is all about. So you can have in the money options and out of the money options. In the money is when the market price of the underlying security, SPY, is above the strike price if it's calls, and or below the strike price if it's puts. So if you're in the money, you have some intrinsic value in the option. Okay, so that means at the end of the expiration date, you're in the money, there's still value in your option. Those in the money options are going to cost you a little bit more, and that's because it has intrinsic value. It also has extrinsic value as well. Out of the money options have extrinsic value as well as volatility. So these are when the market price of the underlying security is below the strike price for calls or above the strike price if it's puts at expiration. Then it becomes worthless. One thing you don't want to do is be out of the money when it comes to expiration because your option is going to go to zero. Going to go to zero real fast. Okay. That's something you don't want to do. All right. So pros and cons of options. Pros, well, you've got a lot of flexibility. Okay. Um, there's a lot of different strategies that you can use with options. As a matter of fact, there's many different things you can do with them, and they're cost efficient, huge leverage. And I'm going to show you in a second here the comparison between buying the stock and the option. The return potential is absolutely phenomenal. It's huge. Sometimes you'll hear people saying, "Well, I made 58% yesterday on my options." They're probably not exaggerating. All right, and we have people. In fact, we've got one of our clients. I don't know if he's still with us or not. Dennis, we call him Double Digit Daily Dennis. He's a retired gastroenterologist. I often say to him, Dennis, there is no money in the world that could make me do what you did for even 5 minutes. He just laughs. He says, "You know, Hugh, had I known options trading before I went to school to become a gastroenterologist, I never would have gone that path either." But he is so addicted to what we do. He spends all his time every morning, gets in and gets out, gets in, gets out, gets. I should watch how I say that. Gastroenterologist. Okay, let me rephrase that. He enters and exits the stock market several times, a number of times. And he sends me reports every now and then as to how he's doing. And he's always making 20, 30, 40, 50, 60% a day trading the same, 2, 3, $5,000, whatever it is that he's trading. And it's not out of the question. And we call him double digit daily Dennis. All right. So it's actually pretty cool. I gotta laugh at this guy. He's a super nice guy. It's so funny because he tells me that whenever he goes on vacation, so let's say he's in a hotel, right? He wakes up in the morning, tells his wife, "Okay, I'll meet you downstairs for breakfast. I'll be down in a little bit. Just give me a little time to jump in the shower, and I'll meet you down in the lobby for breakfast." An hour later, she comes up. He's still in his shorts in front of his laptop trading. Right? He's a self-described addict to this thing. But anyway, yes, and there are people that are doing extremely well. Many strategies available. It's also a very fun, exciting trading, right? Now there are cons. Okay, you've got this thing I mentioned earlier called theta, which is time decay. Again, like buying an ice cube, it's going to melt on you. You do not want to hold it. Remember as a kid, you played this game, maybe, I don't know if you did or not. It's called hot potato. You stand around in a circle and somebody throws you the ball and you got to get rid of it right away. And I don't remember the thrust of the game or how you win or lose, but the idea was to always get rid of this ball that you had thrown at you. You had to give it to, send it, throw it to somebody else, and they had to be on the ball to catch it and send it to somebody else, throw it off to somebody else. Well, that's kind of what options are. You're going to buy them, but you're going to want to get rid of them very quickly too. You don't want to hold these things, all right? They're not a buy and hold kind of a thing. At least not the way we trade. I should tell you that there are some dangers with options, but with the way we trade, first of all, you can only lose what you put into the trade. Now, there are strategies out there where you can actually lose a lot more. I mean, a lot more. All right. So one thing you don't want to do is get it down, go down that path. Stay with the program. You should be all right. There are also commissions to pay on options, and we tell you how to minimize those. We like to use TD Ameritrade. Sorry, we like to use Schwab, Thinkorswim for their charts. But I also, for my bigger trades, I like to use Tasty Trade because their commission structure is outstanding. They have a commission structure of $1 a contract to buy, 0 to close the trade. I shouldn't say buy, to open the position, I should say. Excuse me, 0 to close, up to a maximum of $10. So if you're buying 5 contracts, it's going to cost you $5. If you're buying 10 contracts, it's $10. If you're buying 100 or 200 or 500 contracts, your commission is $10, plus a couple cents per contract for exchange fees that everybody pays. The commission is not like that, I don't think, with Thinkorswim. I'm not sure. There are different programs, depending, of course, on how much you trade. You could probably negotiate that. But I like to use Tasty Trade for that, and also the fact that they have lightning speed executions. Very important. There's and cons are too. They're risky, and let's face it. Options trading is risky. If you don't know when to get out, if you get up and go to the bathroom or go down for a coffee or have breakfast, you could miss the trade. So you have to kind of pay attention. All right, folks. One stock, one strategy, 1 hour a day. That's kind of our motto. Over the years, we figured out what works and what doesn't work in both trading and training. Don't forget, we've been doing this for a very long time. All right, so we kind of figured it out. Why SPY? SPY follows the top 500 US stocks. Very efficient use of analysis time. Like I say, we don't get in front of the computer every Sunday night. I do this on Sunday nights instead. This is fun. This is like a casual, easygoing night, okay? And if and when Aaron gets online, we're going to chat. I think he's on. Hello, Aaron. Are you there?
Yes, I am here. Good
Oh
evening,
my.
sir.
Good evening. How you doing?
Uh, Doing very well. I was going to say that trading is much less riskier than skiing. So if you've ever been skiing before, trading is somewhere that you want to be in.
Yeah, you didn't go skiing, obviously. Yeah, yeah. Actually, you're avoiding storms, aren't you? You're in Kansas City now, right?
I'm outside of Kansas City, Missouri. I'm in a town called Warrensburg, and at the moment, and yes, uh, well now all the world knows where I am, but I was driving through a storm yesterday down near Clinton, Missouri, and and I talked to my cousin on the phone. He said he sent me a text. He's like, do you realize that there's a tornado down there where you're at? And I was like, no, I did not. He's like, well, when you were out fishing down near the Lake of the Ozarks, did you ever look up at the sky? I was like, well, no, I've been out here 6 hours. And I didn't look at my phone or look at the weather, but lo and behold, there was a giant storm that was coming my way, and it was we were trying to drive through it, and we had to stop at a gas station. They turned off the pumps because I don't know if lightning struck and fried the machines, but they weren't accepting lightning struck, and I think, and it fried the credit card readers of the gas station outside. It was very incredible. There's actually a few other stations that had that happen. It was very surreal, and so we decided to pull over and got my kids and my nephews and my niece some beef jerky and some snacks, and they decided to make my car a mess, but it was great. It was a good time. Caught some fish. They weren't biting that much, I think, because of the barometric pressure, but so we've been having a great time out there. I apologize, I was running a little bit late. The first time me and my brothers have sat down together for a meal, and probably I can't even remember the last time, over 20 years.
Oh my gosh, that's awesome. Wait.
All of us together, and so I love my dad, but he without going into too much detail, my papa was a Rolling Stone that song from a lyric from a song actually applied to me. So, yeah, it was a good
Oh,
time.
funny. It's funny. Well, I
Yeah,
hear your dad's pretty accomplished in the financial world and also in the sports world.
yes, correct. Yeah, two-time All-American. He never played football a day in his life until he got into college. He had actually played rugby in high school, as well as he was a Kansas City Golden Gloves boxer, uh, and as well as a bouncer at Ike and Tina Turner's club. It's called Club Imperial.
Oh yeah.
He was a bouncer there, so he knew Ike and Tina Turner, obviously. And so he came to Central Missouri State University. Actually, I think he was a bouncer after, but he went to Central Missouri State University, and he was a walk-on. He ended up to be a two-time All-American linebacker for the the Central Missouri State Mules. So that was their motto, or their mascot was the Mules. So yeah, he was very accomplished.
Cool.
He
So
could
I
have.
already gave an introduction about you, Aaron, but one thing I want to tell everybody, and I never got into this yet because it's, I didn't want to waste a lot of time, but folks, you don't know anything about Aaron because, he's not always here. Where is he? He's all over the place. And this is the life of a trader. So since I've known Aaron, like, I don't know, even in the last year, I can say, okay, let's see, you went to, oh gosh, okay, let's see. You went to Iowa, you went to Iceland, you went to Paris, you went to Mexico, you're in Florida, Las Vegas,
Yeah.
Kansas City. You're in the where are you? You're in the Maryland area, right? Maryland,
Oh yeah,
Washington.
I'm outside of Washington D.C. Yeah, that's where I live.
You just came back from New York and Massachusetts a couple weeks ago.
Yes, I went to see my ancestors. I'm a direct descendant of a woman accused of being a Salem witch. Actually, one of my relatives was hung. I didn't realize that, but one of my great, I don't know, great aunts or great cousins was one of the people that were hung in Salem, Massachusetts. So we have a running joke here that that's where I'm able to predict the future and predict the markets. So that might be part of it.
I think we talk about crystal balls and stuff a lot, and
Yes,
maybe there's a
exactly.
little something that who knows anyway. Anyway, welcome, Aaron, and just chime right in. I'm going to continue on with this. Still in the primer stage. There's a lot of new people. So, anyway, I
Oh,
want to
sure.
say that Aaron and I we run the trading room together every morning, and I mentioned earlier our what's our line? When our indicators unite, our trades ignite.
Of
Very,
course.
very powerful, powerful stuff. So.
Dynamite.
Dynamite. SPY, the moves are quick, you earn your gains faster. SPY is also fairly reliable, consistent, predictive, and fairly forgiving too. So oftentimes, even if you're initially wrong, just hang in there because SPY usually comes back around and delivers the profits. And this is what I love about it too. SPY can be anticipated in any market, up or down. All right. Pretty cool stuff. So why SPY now? Well, guess what? You learn something new, you stay mentally sharp. And by the way, I talked to a lot of people who are in their 70s, 80s, and even in their 90s, and you would never know it. I talked to this guy the other day, I think he was like 94 or something. He can talk circles around me. Very witty, very sharp, and very smart, very intelligent, knows everything that's going on in the world. You can't pass anything past this guy. He was very, very sharp. So your cognitive skills stay up and large, right? They still up, they're very, very sharp. And conversely, I know people even my age, I'm 69, I know people my age and even younger, their brains turn into mush. When they stop working, they sit in front of the TV, they don't, they're not stimulated anything. And everything just seems to, I don't know, rot on the vine or something with them. Um, I know some guys, you say hello to them, they're stuck for an answer. They don't know what they don't, they're completely lost. So you might as well earn while you learn, by the way. All right. That's what we do here. We teach you. You can also learn and you can earn while you're learning. Time's going to pass anyway. Well, you might as well make money along the way. Huge, huge profit potential for serious traders. I talked about double digit daily Dennis. And we got a lot of guys like that. A lot of guys and gals are making a lot of money day trading SPY options. And you've got some very, really achievable dream lifestyles that you can have as a day trader. I know people who are just kind of really catapulted them totally outside of what they were used to, making a lot of money. They've got their dream vacation homes, their cottages, their whatever. You're just talking to Aaron here. He's traveling all over the place. What's he doing? He's trading, making. And here's the nice thing: you can do this anywhere in the world. Aaron takes his laptop with him, and he can trade. Doesn't matter where he is, as long as there's an internet connection, you can trade. And I understand he could even trade in the space shuttle if you got the internet connection up there. I'm not really sure how that works, but pretty confident that they could. That's what we need, Aaron. We need one of the astronauts to trade while on our mission. That would be really cool.
Of
Uh,
course.
I don't know if you know of any, but maybe we can line somebody up here just to get one traded. That would be really, really cool, right? Exciting, thrilling to beat the market. And you can pass this knowledge on to your kids. Financial security. This is what I love the most about it. And this I'm going to slow down and talk because I know I'm going fast here. Folks, my kids know how to trade. Now, they've got their education anyway, regardless. All right. And my son's an engineer. My daughter's in marketing. But I got to tell you, when they need money, all right, my daughter likes to travel around the world, teach English as a second language. She went to Thailand. I thought I couldn't believe that she's actually going until I was driving her to the airport. She said, "Tickets in hand, Dad." I'm going. Oh, okay, I guess you are. A whole new culture, new language, new everything, everything. She loved it, made a lot of friends there. But she also liked to travel around down that area. And I'd always say, Lex, how are you for money? So I'm fine, Dad. Whenever I need money, you know that. I just go to the market and get it on SPY. The American dollar goes far down here, so it doesn't take much to make some serious money and go, and I can take off on my travels. You'll notice my hair is pretty thin and it's gray. Well, I used to have brown hair and lots of it. But when she went to Thailand, my hair turned brown. Sorry, it turned gray. And then when she came back, she announced she's going to go to Peru and do the same thing. Well, you can just imagine what went through my mind, of course, Pablo Escobar and all these guys, and oh my gosh, El Chapo and all. No, 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 you're not going there, really? Oh, yeah, yeah, I'm going down there. Oh my gosh. Okay, well, can't stop her. Again, you need some money? No, no, I'll just go to Spy and get it. There she is with her laptop, trading whenever she needs money to go, visit some of these other countries down in South America. She loved it. She loved it. Made a lot of friends down there too. She's got friends around the world this way. And then when she came back, she discovered, Dad, what happened? Your gray hair is now thinned out pretty good. So, well, that's because you were in Peru. What do you think? That's why. But anyway, it's very liberating knowing that my kids can make some serious money on the stock market. Okay. Whenever they want to buy a new car or whatever, hey, you know what? They go to SPY, ramp up a few good trades. There's the money. All right. So here's a comparison between stocks and options. So let's say you want to buy stocks. Let's say you want to buy 100 shares of SPY. Each share is about $500 these days. That's going to cost you $50,000. Now, each contract controls 100 underlying shares. Well, you can buy a contract. I'm just going to throw a number out there for about $3. $3 a contract. It goes up and down depending on which contract you buy. All right. But that's going to cost you a whopping $300 to control 100 underlying shares of SPY stock. You're actually controlling 100 shares for $300 with an option versus 50,000 for the stock. Now, let's say the stock rises $1. Your equity will now be $50,100. Now, if that happens, if the stock goes up $1, then and this option, by the way, is going to have a delta of about 50. All right. That means that if the stock goes up $1, your option goes up 50 cents. You might think you're getting ripped off, but take a look at this. Your option, your $300 option is now worth $350. Well, do the math. Your return on investment on the stock is 0.2% versus a whopping 17% on the option. Well, which would you rather have? I think it's pretty obvious. And I got to tell you, once I discovered the power of options, I never traded stocks again. And this lady will attest to the fact that making 17% and also you're limiting your risk. You're completely limiting your risk when it comes to options. All right. You can only lose what you're putting into it. Now, you think that, well, SPY's never going to go down to zero. That is true. SPY's never going to go down to zero. But let's say you had options on General Motors a few years ago, or Bear Stearns, or Lehman Brothers. What happened to those people that had options and stocks on those? They went to zero pretty fast during the 2008, 2009 meltdown. Um, but even if SPY drops a little bit, and this is what Aaron gets into, he'll say Monday morning, oh, I think that $500 stock is going to go down to 490. Well, what do you think of that? You just lost $1,000 or $10,000 or whatever it's going to be. I mean, you can still lose money on the stock, right? But with options, you can only lose what you're putting into the stock, into the option, I should say. Let's move on to the weekend review. Here's what happened this last week. Excuse me. I don't want to spend a lot of time on this because it's not so much important what happened as much as what's coming up. Monday was a low, no news day. The technicals pushed SPY over 500 to test 502 as earnings season got underway. We had some banks that were reporting on Monday, and they pushed SPY up. Came back down again off that 502 level. We hit a major resistance level. On Tuesday, we had the flash manufacturing PMI report and services PMI as well. They reported less than forecast, lessened the threat of Feds holding high interest rates longer. Well, that had a positive effect on SPY. Also, along with Tesla earnings, SPY rallied a whopping 7 points on Tuesday. Come Wednesday, we had a durable goods orders that initially weighed in on SPY, but rose on key support area when SPY hit 504. Then it collapsed at the day's end on the Meta outlook, Meta Facebook outlook. All right, so Meta released their earnings. Earnings were pretty good, but the C-suite people said, nah, probably won't happen again next quarter. Got to be a little more careful. The market did not like that. As I mentioned, Meta lost $200 billion literally overnight on those comments. Well, that in effect pulled down the tech sector, and between Meta and so Meta's a pretty powerful stock, even on the S&P 500. I think the weighted average is about 5 or 6% of the entire S&P 500. All right. So, and then getting into Thursday, we had lower than expected unemployment claims. That's where we got the initial spike in pre-market. Then it dropped with pending home sales. SPY caught longer term support, ran back up the flagpole up to major resistance. And I'm just going to fix that little typo there. That is a TO, right? TO, yes, get that. Okay, there we go. All right. And then on Friday, we had the Fed's preferred indicator. All right. That is the personal consumption expenditure. Reported as expected, came in at 0.3% and lower than the forecast consumer sentiment report. That knocked SPY up, fueled by Microsoft and Google earnings. Microsoft and Google earnings, part of the Magnificent Seven, those two companies comprise of something like, I think about 12% of the total capitalization of the S&P 500. That's powerful stuff, folks. That moved the market back up into 510 territory. All right, so here's a seasonal chart. For those not familiar with this, that blue line is where SPY is now. The red line on the bottom is a composite of the last 5 years closing balance on the daily charts, okay? Let's zero in on this one a little bit here and see what's gone on. So the last week, historically, over the last 5 years, SPY rose 3 points over the last week. Now, seasonally coming up in this coming week, SPY actually slipped about 4 points. So if we follow the seasonals, we could possibly see, excuse me, a drop in SPY. Not really sure. We're going to watch this and pay attention to it as the week rolls out. Last week, earnings took center stage with a focus on the Magnificent Seven stocks. These are Microsoft, Apple, NVIDIA, Alphabet, Amazon, Meta, and Tesla. I think there's still a couple left to report. Apple, Amazon, they are still left to report. I think NVIDIA's, I'm not sure. Did NVIDIA report yet or not? I'm not sure if NVIDIA reported or not. They may have. I'm not sure.
I don't think NVIDIA reported yet.
Okay.
We
So
have we have a couple of SoFi's coming out tomorrow. We also have Pinterest. SoFi and Pinterest on my charts are looking a bit bullish. So you may see some positive earnings and some moves to the upside on those two.
we'll see what happens tomorrow. Meta outperformed expectations, but plunged a whopping 15% due to weaker than expected Q2 revenue guidance and an increased spending plan for artificial intelligence. Economic growth slowed in Q1, but domestic demand continues to grow at an annualized 2.8%, supported by growth in consumption, business investment, and housing. And PCE confirmed slow progress on inflation. Interest rates expected to stay higher for longer periods. Now they're actually talking about September for a cut in interest rates. Rate cuts, as I mentioned, might begin in September. Resilient economic growth, corporate profit stimulation, and the Fed's rate easing policies support still an ongoing bull market. So last week was the busiest of the earnings season, with about a third of the S&P 500 companies reporting earnings. representing about 40% of the index's market capitalization. So far, the results have been encouraging, but with about 80% of the companies surprising to the upside and exceeding earnings expectations by about 10%. Given the outsized contribution to the index earnings, the spotlight, however, was on the Magnificent Seven group of mega cap tech names. So we're going to see what happens there. But valuations have risen over the past 5 months. The bar of expectations is high. Companies must deliver the earnings and outlook to support these valuations. Good news is that altogether, companies have so far been able to rise to the occasion. But for the full year, earnings estimates are holding steady, indicating that corporate profits are on track to grow just a little over 10%, which would mark a meaningful acceleration from last year. Solid demand might continue to support revenue growth, while profitability might recover as input costs slowly moderate. We're going to see what happens. All right. Yes, earnings are still continuing, but a lot of them are going to be the lesser capitalized companies. Again, watch for Apple, I think NVIDIA, and also Amazon. They're going to be reporting, I'm not sure, probably this week. We'll see what happens.
Can I borrow the screen for a second, you?
100%. I'm going to hand this off to you. Yes, I hit new shares, multiply, stop share. Here we go. All yours.
Thank you. Let me just show you a little bit of what I see over the next well, what I've seen over the last couple of days, as well as what I think can happen possibly. For those of you that aren't familiar with our work here at DayTradeSPY, this is the Andrews pitchfork. We're currently hit the middle median line here and started to bounce to the upside. On the 4-hour chart, it is a little bit busier. Actually, let me hide this real quick. But this is a downward sloping center action reaction set that we identified in real time in the trading room. We saw some 50% sellers here, and they're getting pounded. We're seeing some 61.8% sellers here, and I'll show you in my chart. But I did want to mention that we're starting to get kind of close to this upper boundary on this downward sloping line. So we really have to break through this to the upside on the futures. That would be about 5150 to 5160 to keep this rally going. Otherwise, this may try to come in and fill in some of this gap, which I'm about to show you. There's actually a daily gap on the futures that's all the way down here at 5080, near 5080, as well as in the trading room. I know this might be a little bit busy for some of you, but in the trading room on Friday, we predicted a high. If we broke through the 508.50 level here, we could see price rising in the 509.75. It hit 509.75 and it went slightly above that to 509.88, but that was the resistance point for the rest of the day. So if any of you were in calls, you would have heard that information in the trading room. And we did struggle to break above. So we did see some sellers come in here at 50% of this recent move, as well as 60% here. And we also have this open gap. So just for those of you that follow us and know what I'm talking about, just keep that in context in the back of your mind, that between 506, 506.35, 506.25 to the bottom of this gap, around 503.40, there's an open gap to the downside. If we do continue the upside, we're going to see a symmetrical extension, possibly in the 511.05, an ABCD pattern to the upside. But it looks like there's some strong selling pressure here at 61.8. So this really has to break above that 510 area to invalidate these 61.8 sellers and keep the market going. So just a quick feedback, what I see on the charts for coming into tomorrow. Also, SoFi, I mentioned earlier, is one of the main earnings releases for tomorrow, and they're starting to show some action. I would anticipate a continued push up at least into the $9 range, and then also Pinterest over here, as well as looking bullish on the weekly. This is a modified shift with support here, so it also looks the charts are pointing bullish. So I'm thinking we have bullish price action on Pinterest, on SoFi. They might help to move the market, but they're not incredibly big. I just wanted to show you those two, as well as what I'm doing in the background here. So back to you, Hugh. Go
Sounds
ahead and
good. Just to be
take it
clear,
over.
we don't trade Pinterest or any of these, but these are the influencers that are going to be affecting the markets longer term. So we are going to be looking at some of these stocks just to see how what kind of an impact they're going to have on SPY, right? So
Exactly.
here's what happened with SPY. The S&P last week just rose 2.7%. Year to date, 6.9. It was actually higher earlier. Excuse me. NASDAQ up 6.1. The Dow is up only 101.5% year to date. Coming up the week ahead, what are we going to have? Let's see, on Monday, low to no news day, so not much going on there. On Tuesday, unemployment cost index, Chicago PMI, and we've got a consumer confidence report. Earnings from Amazon, Eli Lilly, Coca-Cola, AMD, McDonald's, Starbucks. Um, what is this? MDLZ. I kind of knew what that was. PayPal, Mondelez, I think Mondelez, PayPal. These are coming up Tuesday. In aggregate, these are going to have an impact. Wednesday, manufacturing PMI report from Institute for Supply Management, and also S&P Global is also going to be reporting Jolt's jaw funds. But here's the big one: Fed funds rate is coming up right here. I am going to make a highlight this here. This is going to be highlighted here because this is going to be the important one here. Let me just write this one here. Keep an eye on this here, okay? Fed funds rate. And this is normally on Wednesday. Why is it? Oh, it is on Wednesday. Yes, it is. It is on Wednesday. There it is. That is going to move the market, folks. That's what's going to move the market, okay? And of course, there's going to be a conference call and all the rest of it too. Thursday, unemployment claims. Apple is reporting earnings. And Friday, we've got a PMI report from both ISM, Institute for Supply Management Services, and also S&P Global Services PMI reports are going to be released on Friday as well. And some other news there from the earnings department. But Fed funds rate, that's going to be the big one on Wednesday. Earnings continue all week. So here's how I would look at volatility this week. Could be low on Monday, elevated on Tuesday. It's going to be high on Wednesday, elevated Thursday and Friday. Best to be out of any positions by day's end on Tuesday. All right, you're probably not going to want to be in on that as we head up into the Fed funds rate that's going to be released. All right, opportunities. They're provided every day. We show you how to spot them, how to trade them. All right, very important. I'm going to give you an update on the 2 to 10K challenge. Those of you who are in the first and second challenges, you did very well. We hit 2,000. We took $2,000, turned into $10,000 in less than 3 months. This time around, yes, it is a challenge. And what I'm going to do is it's probably going to be, unless some really unbelievable moves happen tomorrow, I doubt it, but we're going to be in a bit of a negative on this one here. However, here's the best part about this. There's going to be a summary report prepared at the end of the month that is going to identify the weaknesses, where we went wrong, what we could have done better. This is going to be an invaluable resource for those of you in the trading room who are going to get this report, okay? Because again, remember when I told you earlier this morning, tonight, I said I celebrated all my wins from a long time ago, right? Still do. But it's the losers that you actually learn from. Now, the smart person will learn from their losers, but the wise person will learn from the losers of other people. So those of you in the trading room are going to be getting this report. And if you take it to heart, read all the stuff in it and really learn the stuff, learn from my mistakes and don't do them. This way, you're going to be just that much further ahead. So maybe we lost a few dollars, but don't ever lose the lesson. Don't ever lose the lesson in those losses. And yes, we got a little aggressive. We're going to go into all the detail on that. All right, now, first of all, before I go to the next slide, I just have to check the participants to make sure that somebody is not online that I don't want to have online. Okay, good. I can show this next screen. Okay, so here's my personal trades on Friday. My personal trades on Friday. All right, so I'm not going to tell you how many contracts I had in here. All right, not going to tell you how many contracts because I don't want to embarrass anybody one way or another. But look at this. My first trade here, getting it at 934 for 5 minutes. I picked up 20 cents from 447 to 467. And my second trade, I picked up a whopping 32 cents in 1 minute from 950 to 951. All right. That's a gain of 32 cents in 1 minute. Now, if this was only 10 contracts, trade number one would have been $200 gain on an investment of $4,470, 4.5%. However, trade number two, which was, by the way, okay, so trade number one was next Friday's expiration, May the 3rd, right? You can see it. However, trade number two was same day expirations. And this is why I did not announce this, because I just didn't want a lot of people following me, because I may be willing to take the risk, but it's not something I might want to condone for other people to take the risk. I mean, there's going to be risk in these same day trades, but I was willing to take it. All right. So I want to make sure that people just don't blindly follow me, because I know everybody's responsible for their own trades. And, if I fall over the cliff, I don't want everybody else to fall on top of me, like a bunch of lemmings. I'm not saying you are, but it's just very important that we like to teach people how to fish rather than just throw you a fish in this regard. So, but anyway, this is kind of what I did. Now, if I traded, well, number two, only 10 contracts, I would have made $320 on a $1,680 investment. That's a whopping 19%. Here's the nice thing about it. Done by 951. Done by 951. How cool is that? Folks, listen, if I only made this much money on that day, and if I did this every day, that's $520 for the day. Less commissions, right? That's $135,200 a year. Is that so bad? Can you live on that? Done by what, 9:51? Done before 10 o'clock? Do you know most corporate America goes for their first coffee break at 10:30? I mean, that's really kind of cool. So, all right. And if you'd like to do that, let me know in the questions box. And that's why you are here, because this is what we do, is we teach you how to do that kind of stuff, right? All right, now for the 2-minute tutorial, here's the question. Why keep a trading log or journal? Sometimes people ask this question and say, well, you need to for the following reasons. And here's an example of a trading log. And I'm going to give you this is just a screenshot. Let me pull up, see if I got a trading plan here for you. Let me pull this up here. Excel. Okay, let's pull it up here. Okay, let's take a look here. Okay. All right, here. Here's, okay, I want to make sure they get this here. Okay, so let's say you started this. Yeah, let's just expand this here. Let's say you started this on May the 6th. And you want to take $1,000 and turn it into $100,000. It's not pie in the sky, folks. This is very doable. Okay. So then you only traded making 5% net per trade. 5% net, starting with $1,000. 5% is quite doable. All right. Actually, using our system, it's very, very doable. All right. So let's say you were to do this. Say you traded, what's this, 20 trades. First 20 trades, right? Making $50 a trade. That's not very much money. Okay. And then you hit $2,000, right? You're doubling your money after 20 trades, right? And then you're going to take $500 out, reinvest the $1,500. The next 20 trades, you're doing $1,500, making 5%. That's $75 each time. And now, after 20 trades, you now have $3,000. Now you're going to take $1,000 out, reinvest the rest. So $2,000, next 20 trades. And now you have $4,000. You're going to continue taking $1,000 out, reinvesting the rest. So all the way up. And guess what? By the end of the year, right, starting on May the 5th, by the end of the year, December the 30th, you should have $101,750 using the system. All right. Now, this is just one way of charting the your log, your spreadsheet. So what I do here is I've got my starting capital, my budgeted gains, and my ending capital. This is on the budget, right? But I put my actual net proceeds right here, net of commissions in this column right here. And then, of course, my year-to-date balance. Okay. So I better put this up here. There we go. So what I'm doing here is, I'm tracking how am I doing compared to the budget. Now, you will find that most of the time, you're actually beating your budget. It's just as easy to get $63 as it is $50. $65. Instead of $65, you're making $60. You're making $75. You're making $59. and you're ramping it up here, right? So you're going to find yourself actually ahead of your schedule most of the time. But here's the danger with this. Eventually, somewhere down in here, you're going to say, "Oh my gosh, why am I getting looking at $50? I'm actually making more. I'm gonna push the envelope a little more and get a little more, get a little more, get a little more, right? I'm pushing the envelope." And then instead of maybe going for $75, you're going to shoot for $85 or $90. And you're probably going to get it most of the time. But there's going to be one time over here, instead of $100, you're going to aim for 140 or 130. You're not going to get it. You're going to sell for a loss, and it's going to knock you down from $2,400 back down to 1,700, right? You got greedy. You got greedy, right? But by having a system like this, now, whatever your goal is, it doesn't have to be 1,000 or 100,000. It could be, whatever it is. You could be shooting for just making $100 a day for the rest of your life. That's fine too. Put it on a spreadsheet. But the most important column here is this, the notes section. Follow the plan, stuck by the rules, follow the rules, waited for the perfect setup. Um, and then if you have challenging trades and you didn't quite make it, right? Uh, maybe not make that in the notes, right? And make a note that, I jumped in ahead of what the indicators were indicating. I jumped the gun on this one, or I got out too soon. Um, so I'd like to put that in there. Now I also have this column here, column I. I have these colors. So now this is very random. That this is not related to what the trades are, but I'm just using this as an example. I just have these colors posted on, let's say, if I have a challenging trade, for example, I might just put a yellow box in there. If I have a losing trade, I'll put a red box. If I have a really great trade, I'll put a green box. If I have just a normal trade, I'll just leave it blank. The reason I do this is because usually before you get a red box, you'll have a series of yellow boxes. In other words, your major losses are not going to just come out of nowhere. There's probably going to be uh, you know, some challenging trades leading up to it. Now, whether it's you misinterpreting things, getting a little greedy perhaps, or a little gun shy or fearful or whatever, or simply the market is just changing on us. Markets do tend to change. They're very fluid. But it's nice to see that if you have a series of yellow boxes that, okay, something's going a little funny here. I better take a look at it. Maybe relax a little bit. Maybe get closer to the target price. Maybe just be a little more careful. You don't want to get too many yellow boxes because that means there's probably a red box around the corner. You don't want to do that. Get back in on track and then just be very careful and to do that. So that's kind of a trading plan. Now you can adjust your trading plan however you want. It's just on an Excel spreadsheet, right? It's very simple to do. So that's kind of where that is. Now, why have a trading plan at all? This is where you plan your trading career. This can be your roadmap to riches. All right. This is where you're going to be able to follow along and determine where you're going to go. Right. If you track your progress, it keeps you accountable. You can celebrate those wins, say, yes, yes. And you can, take your wife or girlfriend, or your husband or wife out for lunch and say, I had a great day on the stock market today. Let's go for dinner tonight. Right. And you can also isolate your winners, your losers, I should say. So when you have a challenging trade or a negative trade or anything like that, put that in the notes. Go back and review what went wrong here. How did I think this was a good trade and suddenly it turned on me, or why did I get out of it, or find out what you did wrong. If you can do less of those things that are giving you challenges and more of those things that are making you money, eventually you stop doing those things that are hurting you, and what's left? Just those things that are helping you, right? So you're going to move your account forward. That's really important. Enables you to learn from your mistakes. That's why a log is very important. Sometimes I get people emailing me and and they say to me, "Oh, Hugh, I lost all this money last week or 2 weeks. It's not working or this or that." And I say, "Well, it's funny because I made money." I say to them, "Send me your log. Let me analyze your trades." And Aaron, I'm surprised at how few people keep their logs. I can't tell you what you did wrong, what you could have done better. Maybe the market went funny. I can't analyze your trades if you don't keep a log. So keep a log. All right, keep a log. It's not that hard to do. Anyway, let's get into some questions, Aaron. What kind of questions do we have up here? There must be a ton of them because I don't want to get, oh my gosh, 9:08 already. Whoa. All right, here's a question
Yeah.
that comes up a lot. The pattern day trade rule. Pattern day trade rule. Do you want to get in the pattern day or do you want me to do the pattern day trade rule?
You know more about it than I do, but I do know about the pattern day trade rule. But I think it has to do with if if you have a margin account and you are below $25,000 in your margin account, you cannot take more than is it five trades in a
It's actually three trades in a
three
5 day
trades
period.
in a 5 day session. Yes, I get that mixed up sometimes. So
That's in and
you
out,
cannot
in
take
and out.
more than yeah, you cannot take more than three trades in a five trading day session. So that would be five consecutive trading days. Or they will flag your account as a pattern day trader. The way that you get around this is that you use a cash account. So if you use a cash account, you will not get flagged as a pattern day trader. While you build up your account, you can do that. Obviously we're not in our room. We're doing basics, buying to open, sell to close. We're not trading, uh, naked calls or puts or um, spreads for the most part where you need margin. So if you have a smaller size account, and you're trading with us, it might benefit you of just taking a couple trades in your account while you learn, and then be able to grow your account up over time.
Yeah. There's also another way if you do get caught with your pants down on that, and this was suggested to me by somebody over at Tasty Trade, and they flag your account, and if you do, I think if you do what is it, 4 times or something, they'll freeze your account for or not freeze it, they'll suspend your trading for 90 days. So they tell you to sit in the corner, sit on your hands for 3 months. You're not trading with us. So here's the way around that. Simply open another account. You can even open in the same brokerage, then move your money from that frozen account into your other account and just pay attention and don't do that. I also know people with several trading accounts, like somebody might have Tasty Trade, somebody else will have Thinkorswim, somebody else will have, another account somewhere, and they'll do their 3 trades in one, flip over to the other for 3 trades, flip over to the third for 3 trades, and by the time it makes the round, they can go back to the original first brokerage and make their 3 trades there. And eventually, when they accumulate all this cash in all these various brokerages, when they hit their 25K, they move their money into whichever account they like the best, and then they can trade all they want. So there are ways that you can actually kind of get around that, but it is designed to kind of curb that gambling aspect of trading. You don't want to really over trade. All right. What I like to do is I like to have a certain goal in mind as to what I'm willing to accept as a profit for the day. So let's say I want to make $1,000 a day, and if I make 1,200 or something, I'm happy with that. I don't have to keep going back to the market and trading all day, all day. Just because the market's open doesn't mean, I have to be in it, right? So that's kind of important. All right, next question, Aaron. Sorry, I don't want to be stealing your thunder here. Any other questions here coming up?
Steal my thunder. That's funny because it's about to rain outside here. Um, Let me see here. Um, During the trading day, do you show us the trades you're doing as well as explain why you think the trades are winners?
So we show you, so by law, we through FINRA rules, we have to show you a SIM account. But we get into the trades that we show you and we use real numbers, real charts, real time, real everything. Okay. So I'm not allowed to show you my real trading screen. But we discuss everything in real time, real market conditions, real trades, using a SIM account. And we do explain, we completely narrate everything, 100%. And then some. Sometimes you'll have to put up with some bad, corny dad jokes, but comes with the territory.
Yes, of course. So let's go to the next question. Well, that's what keeps it lively in the trading room. Some people actually come just to hear us talk and give our jokes while they trade. So once they become proficient, they want to hear somebody else's analysis, and we have a lot of traders like that that have been with us for years. They'll trade our recommendations, but they might use. This goes to the next question. They might use 0 day or weekly options, but they want our input and our thoughts on the market. So Frederick asks, seems most of your trades are same day entry exit. Why not just trade the same day expiration? Less expensive. I do realize the time decay factor eats away the value much faster versus 1 week away strikes. But if you're right, and the gains accumulate much faster. I've compared your trade recommendations to 0 day to expiration. I'll just say I take your daily recommendation, but I take the 0 day to expiration.
Yeah, then that's exactly it. You know, that theta loss, if you are wrong, and we're human, we do the best we can with what we have, but there's no guarantees. And even though we expect and we usually are in and out the same day, uh, if you're out even an hour from now on a 0 day expiration, you could lose some theta loss. And when the theta goes, when the stock goes against you, that premium could get sucked out real fast, and it's very difficult sometimes to make it back. So I like to have it as stress-free as possible, especially for the new people. So if you buy time, all right, you're paying a little more, quite a bit more for the option perhaps, but it doesn't matter because when you sell it, you're getting it all back anyway. So you might want to, you might buy, say, 20 contracts on same day expiration. Well, just buy, 3 or 4 or 5 contracts on a week out expiration. What's the difference? If you're going to spend, say, $3,000, whether you're buying this, today's expiration or next Friday's expiration. What's the difference? The difference is you have less theta loss on Fridays, and you're going to get it all back anyway. So that theta loss is at a very shallow angle going down versus a very steep angle with same day, and it's just a very stressful thing to be in that if you're wrong. So that's kind of my answer on that one.
Yeah, the next question I saw, does a pattern day trader will apply to your trading style if I only have a $5,000 account? Yes, so you have to, if you have a $5,000 account, you would need to have a cash account to not be flagged for the pattern day trader rule, or just make sure that you're not trading more than 3 times in and out during a 5 day period. But if you want to follow along with us and you have a smaller account, we recommend obviously that you have a cash account. Another question, I've seen contract prices of SPY go from $1 to $211 per contract. Is that what you're talking about as far as 0 day trade to 0 day expiration, maybe? Ivan, not really sure about that question, and maybe you could
I'm trying to find that question. Yeah, I can't. Let's see if we can find that question here.
Why do puts cost more than calls? That's a good question.
They don't always. It depends on volatility. If you got a high volatile option, that's going to cost quite a bit more, and you got to be careful about that volatility. Don't get caught in the squeeze. And this is something we go into in the trading room. Because if you buy an option with high volatility, that's fine if you can sell it with high volatility. But what often happens is they suck the volatility out of it. The volatility will drop when the event that's causing the volatility passes. So in other words, if there's an announcement that they're expecting, and you buy, let's say, an option for $4, the volatility is sitting at, I don't know, 35%, and the option costs you $4, and then the announcement is made, the volatility drops to, say, 20%. Suddenly your option also drops in value, say from $4 down to, $2.50 or $3. So you got to be very careful when volatility is excessive because you can be caught in that volatility crunch. I think that's really important. And I think we'll get to some more questions. I kind of want to go over what we have, how we can help you. And I'm going to quickly go over this because I know that there are a lot of people asking, Aaron, well, what programs do you have? Where do I, what should I sign up for? So we have these solid gold, learn and earn actionable plans you can do right away. And these are all exclusively available through DayTradeSPY. Go to our website. Go to our website. That's where you're going to get this whole thing. Start with the inner circle. If you don't know where to start, this is your most inexpensive entry into what we do. Every morning, you get a morning market analysis in pre-market just after 9 o'clock. You also get a follow-up report as to what we actually did during the day. And you'll be invited to our Tuesday night interactive meetups. These are recorded in case you missed them. They're recorded and sent to you after they happen. You can ask all kinds of questions, anything at all related to SPY options, even chart setups, chart patterns, where the market's going to go. How do you read How do you read the markets? All these different things. The cost is only $9.95 a year, $275 a quarter. Great place to start, especially if you're new to options. We've got the Day Trade Spy Signal. You get 3 to 5 of these a week. All right, sent to your email and cell phone text. Buy it right away. Put it up for sale for a 5% gain. If it's not sold by the end of the day, sell it at market close. $14.95 a year, $3.99 a quarter, or try it for $149 a month. You get a 14-day, 100% money back guarantee if this is not what you want. All right, in the same vein, we got the pick of the day, a very sort of a similar trade, but this one's a little bit different. Aaron and I predetermine what this is going to be before the market opens. All right, we don't wait for the market to open. We get together, we battle it out. Is it going to be calls, puts, which ones? How's it going to go? This is going to be emailed to you just after 9 o'clock in the morning. Again, this one you're going to buy immediately at market open. All right, making sure the 1 minute candle is going in your direction, then buy it. So this is actually anchored in time. What we're saying is the market's going to go up or it's going to go down today, enough to give you a 6% return on your investment. But we anchor it in time at the market open. All right, so you put it up for sale for 6%, good till cancel gain. And if you have to hold this overnight, you probably could. $14.95 a year, $3.99 a quarter. Check it out for only a quarter if you want. 30-day, 100% money back guarantee on this one. A lot of people really like the pick of the day. It's ideal for those unable to watch the markets all day. If you can't sit in front of a computer for an hour in the morning, the pick of the day is the place to be. Okay, and of course our signature program is the trading room. Aaron and I host this every morning, interactive, learn and earn, fully narrated. This is where our strategies come alive in real time, real market conditions. These are interactive too, so you can actually get in there and ask questions. You get your questions answered for the most part. And we run this every morning, 9:20 to 10:30. We don't monopolize your whole day. It's just an event. It's an event that happens. Everybody puts their life on hold. They get into the trading room. They learn how to manage this, how to manage their trades, and how to enter and exit and make some money along the way. Every morning we do several trades, and we generally walk away with a pretty good coin at the end of it all. $6.99 a quarter, 14-day, 100% money back guarantee. And if you know what calls and puts are, this is where you need to be. Very simple. We also have our ultimate training workshop. If you want to learn and earn on your own, it's your own time. We've got 11 recorded webinars, each about an hour and a half in length. These are hosted and recorded by myself along with Aaron. You've got unlimited access for at least 6 months. We have to put something in there. So that's what we put in there. The truth is, nobody's ever going to, we've never cut anybody off. So there are people who've been there a lot longer and they still have access to it. And this is where you're going to learn everything we do. We teach what we trade, trade what we teach. You're going to learn all about options fundamentals, money management, technical strategies, everything. Get your confidence in the Ultimate Training Workshop. Get those repair skills and master Aaron's deep dive analysis for much, much more than 6%. Some of these trades are unbelievable that Aaron comes up with. And if you just patiently wait for the setups, get in there. And like I said, when our indicators unite, our trades ignite. Some of these things absolutely take off like a rocket. Special price for this, the Ultimate Training Workshop, as I understand it, is still available for $9.95. If you are new to options, this is a really good place for you to be. If you're experienced, you're still going to get a lot of great information because it's in that subtleties, those little nuances where that you're going to learn from. This price is subject to change, by the way, without notice. Okay, this program actually does go for considerably more. It's just that the IT people, they don't listen to the Sunday night session, and they completely forgot that it's still up there on the internet, so up on the website. So go in there and grab it, folks. Don't hesitate on this one here. This is an amazing deal. Before we also have other online workshops too. You're going to get to these $249 invest in yourself first, then the stock market, and there's a whole host of other workshops you'll find online. Just go to the top right corner in the DayTradeSPY website. And I was just saying here how our IT guys don't pay attention here. And this was never supposed to go as long as it has, but it's only supposed to be like a 2-week promotion. And I was just going to say that before Eagle bought us out, that Ultimate Training Program was going for $3,500, and it was selling quite briskly at that. So 995, it'd be foolish to pass that up. So anyway, let's go to more questions here. What do we got? Anything?
Sure. Let's check here. Did you officially change the rules on holding the pick of the day overnight?
Do we or did we officially? Okay, so what we did Friday, a little bit different. All right, so we're instituting a little change in our approach because um, I don't like to use stop losses, but that doesn't mean other people don't. If you're going to use it, and I'm going to get into this in the weekly e-newsletter, and Aaron, I know you like stops sometimes, and sometimes you don't. Depends on what the strategy is. So what we're doing here is we do want to kind of give some guidance as to the exits on our trades. In other words, if our trades do not fill during the morning session, we want to give you some guidance. And I know that a lot of new people online, they may not be familiar with what we're doing or when to get out. And before you know it, they're letting their options go to zero and they lost all this money. And, they're kind of in a tough spot. So what we're doing is we're saying, okay, look, if if the option drops to such and such a level, preserve your capital and exit. Just get out of it and exit, and you'll have your capital left to trade the next day. And we had that situation actually on Friday, and we had a stop loss. But you know what? It didn't hit the stop loss, so you should still be in that trade come tomorrow morning. So if
Yeah.
the,
Also, if I could say something, Hugh, I think maybe there was a mistake on my part about the stop loss being 60% on the pick of the day. It's actually 65%. So if you're in that trade based on your entry is 65% stop loss, and then a 6% gain. Usually our pick of the days, we're very, very correct on those. So they usually fill pretty quickly, but if there's ever a chance, and most people got out on Friday of the pick of the day, but if you're for some reason delayed in getting your entry in, or didn't get out on the first candle at the market open, you may still be in that trade. So um, I think based on my analysis, you can see that there's an open gap. I'm not necessarily sure how much going to come down at the open, if it does come down at all tomorrow. But we're looking for that open gap to somehow be filled, possibly over the next day or two. So sorry, back to you.
no, that's good. That's good. And yeah, and the pick is designed to be held overnight because usually we have enough time in which to cover an overnight hold if you need to be, which is why we like to have time rather than a 0-day expiration. So here's another question here from let's see, hi Hugh. If the SPY opens up in the money of the SPY daily pick, do you wait until the stock price reaches at the money or slightly out of the money? It doesn't matter where, okay, and sometimes we might give you in the money, out of the money, whatever the option is, buy that particular option. Okay, so if we send you a pick, that is the option. Don't change it. Just take that option. Okay, take that option. So um, and we're usually pretty good on that. So and sometimes it might be a little bit out of the money, sometimes it might be in the money. So or it's usually at the money. All right. So but trade whatever that option is that we send you. Okay, so I'm just kind of scanning some of these things here. Yes, this recording is going to be available. It will be on the website. I don't think they post them on the website until the next day, so tomorrow it should be on the website. Okay. During the trading day, do you show us the trades you're doing as well as explain why you think the trades are winners? Yes, we analyze it and we get into high probability trades. But you just want to get into these high probability trades. We don't, we're not just willy-nilly jumping into trades. The trades that we get into do have some basis as to why we trade what we trade. Sometimes we wait patiently until a certain setup happens, then we enter the position. Other times we get in fairly early on, depends on the situation. So Is there any limit as to the amount of money you can have in your cash account? As far as I know, Pam, there's no limit. You can have $1 million in your cash account. That's fine too. Okay, so let's see. Yes, 25,000 is the limit on that one here. Okay. All right. I don't know, a lot of questions here. Just okay, yeah. We'll probably be going over the trades we did on Friday. Any open positions? I think we're going to review those open positions on in the trading room. So, and really, that's the place to be, folks. That's a real time, real market, real. That's where it happens. We don't like to go Monday morning quarterbacking on these things. We want to do them in real time and explain why we trade what we trade. So we give our analysis. Aaron gives his deep dive analysis, and the stuff's pretty accurate. So when we have our analyses matched up and we're going in the same direction, it's a pretty good bet that the market's going to go in that direction. Another question about how can you make more than 6% when SPY's on a big run? All right, so here's the question that comes up about the 6%. So you have to have a standard by which you measure success, and we use 6%. The reality is you can actually make a lot more than 6%, and those in the trading room oftentimes do make a lot more than the 6%. But we have to have that standard by which to measure. And I don't know, Aaron, about you, but long, long time ago when I used to follow other people and be in other different programs, and they would say things like, well, the stock rose 3 cents or 4 cents, so it's a success, and they think they did something right. It's a success. Well, I'm sorry, I'm not going to sell it for a 3 or 4 cent gain. That's not going to cover anything. Why would I do that? Give me something that I can sink my teeth in. So we say you're going to use, we're going to use 6% as that standard by which to measure success. So it's 9:30, Aaron. I don't know. Do you have anything else to add to this before we wrap it up, or I don't want to keep people too long here tonight.
Sure. Let me see here. Just looking at the other. What is the trigger to enter the pick of the day? I think you were talking a little bit about that. You need to enter within the first 2 minutes, in the direction of the market, that the market goes. If there's 3 candles against you or 4 candles against you that are completely opposite direction, then you might want to enter when the price starts going against you. But that's very rare that happens. Also, we have a Fibonacci workshop that's coming up, I believe
Yes.
on May 15th at 11:30 a.m. May 15th at 11:30. I will be talking about everything on soup to nuts, from the basics of Fibonacci and understanding where it is and where it comes from, all the way to a couple of advanced strategies, as well as how to combine Fibonacci with support and resistance, and how to look at different areas. And we'll even get into some of the more advanced things that I don't necessarily talk about or use on a regular day-to-day basis unless I'm looking for market turning points. So that's going to be really great. So
Thanks. I'm sorry I didn't put that on a slide. Yes, write this in your calendar, folks. Mark the date, May the 15th. It's a Wednesday, 11:30 a.m. Eastern Time. You're not going to want to miss this. You're not going to want to miss this workshop. This is going to be an outstanding workshop. Aaron's running this one here. I'll be in there as well on the sidelines watching and stuff and all that and taking questions and whatnot. But this is where Aaron gets into this deep dive analysis. Now, Aaron, is there a certain level of experience you think that people should need to get into this, or is this for beginners, intermediate?
it's for everyone. So it's for beginners that are just learning Fibonacci. It's for people that have had some experience. It's for people that haven't had, or it's also for people that are advanced, people that um, have taken our other courses or other workshops. It's really for everybody. There's I tend to think of, and this is some feedback that I've gotten from other members, is that even after they learn Fibonacci and they're starting to master some of the concepts, and they might be intermediate at looking at the charts, they really like to see what I look at and how I see the markets, because it puts some perspective and it helps them to understand different areas of buyers and sellers. Just because somebody's a buyer at a 50% or a 61% area, sometimes they'll take it up and take out those stops. We won't necessarily and then the market will continue in the direction it's supposed to go in. So how do we identify that? How do you identify which Fibonacci level to trade? How do you identify, okay, is this going to reverse here or not? We're going to put all that together, and it's really just going to be a great event. So
yeah, you want to get on that. So, okay, another question here. I mentioned I don't use stop losses. Why not? Read the newsletter that's going to be coming out Thursday morning. I explained it all in detail into that, and you'll want to get that information on that. I don't want to, like you say, I don't want to keep everybody here long, and there's a lot of questions that I'm sorry I didn't get them all, but so we do answer questions, trying to get to as many as we can on the Sunday night session. We answer questions on Tuesday night at the Inner Circle webinar. We answer questions in the trading room. With those 3 venues, hopefully you'll be able to get all your questions answered. And I got to tell you, Aaron, that fire is getting a little hot behind me here, so I got to run. It's been fun, but we're done. Folks, trading room subscription page is coming up. And thank you all for joining us. Oh my gosh, we got those dancers up already. They just can't wait. Hey, listen, we'll see you here tomorrow morning in the trading room. Thank you, Aaron. Have a good one.
thank you. Have a wonderful week, everybody.
The moon and the sun, be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing, you can have it if you dream it, just be brave and you'll achieve it all, it all. I wanna know if you really want it, and if you do then just shout it loud and clear. I wanna know if you really need it, and if you do then just shout it loud and clear, loud and clear, loud and clear, loud and clear, shout it loud and clear.
Just a reminder, too, if you are in the trading room, check your inbox or your junk box. The invites had gone out already for this week. If you have not received it, email us. Customer service at DayTradeSPY.